XM, score of 8.2, strong education, 15 years running. Right for you? Here's the honest answer. XM is a MetaTrader-first CFD and forex-broker, running since 2009 out of Cyprus under the Trading Point Group. Overall score, 8.2 out of 10. That's a solid number in this category. But the score isn't the thing you should actually care about. The thing you should care about is which legal entity opens your account when you sign up. Because same brand, same platform, same logo, very different protection depending on where you land. Hold that thought. First, what XM actually is, and just as important, what it isn't. XM is a CFD broker. CFDs, contracts for difference, are bets on a price moving, without owning the actual thing. If you buy an Apple CFD, you don't own Apple stock. You're betting on where the price goes. That single distinction decides whether XM is the right shop for you before any other detail matters. If your real plan is long-term buy and hold, actually owning Apple, Microsoft, and S&P 500 fund for the next 10 years, XM isn't your broker. You want a real investment broker for that. But if you want to actively trade, forex, indices, commodities, stock CFDs on shorter timeframes, then XM is very much in the conversation. Now, about that legal entity thing. This is where most reviews wave their hands, say, regulated by 4 authorities, and move on. That's lazy. Here's the actual mechanism. XM isn't one company. It's multiple separate companies under the same brand. There's Trading Point of Financial Instruments Limited, the Cyprus company, regulated by CySEC under EU rules. There's the Australian arm, under ASIC. There's Trading Point MENA in Dubai, under the DFSA. And there's an offshore company in Mauritius, under a much lighter regulator called the FSC. When you sign up, XM decides which of those companies opens your account based on where you live. EU resident, you go on the Cyprus entity, which means EU standard leverage caps and access to the Cypriot Investor Compensation Scheme. So if the broker ever collapses, some of your cash is protected up to a set limit. Quick translation on leverage. That's the ability to trade with borrowed money, controlling a much bigger position than your actual cash allows. EU rules cap it low for retail traders on purpose. Australian client? You get the ASIC entity, same protective logic under Australian rules. Both of those are what the industry calls Tier 1 regulation, real teeth. But if you're outside those specific jurisdictions, and that's a large chunk of XM's global user base, you get routed to the Mauritius offshore entity. Same website, same colors, same support agents, higher leverage on offer, sometimes eye-watering, hundreds to 1, faster onboarding, and a materially weaker safety net when something goes wrong. That's not a hidden trap, it's a deliberate structure. It's just one the marketing pages don't lead with. Read the entity name on your account opening documents. If it doesn't say Trading Point of Financial Instruments Limited, and it doesn't mention ASIC or the DFSA, assume you're on the lighter regime and dial your risk down accordingly. Regulation, sorted. But regulation doesn't tell you what it costs you to actually trade there. Cost is next. XM's pricing runs on a standard forex-broker trade-off. You either pay in the spread or you pay in commission. Quick translation. The spread is the tiny gap built into every price you trade. It's how the broker earns money on trades without charging a visible fee. Commission is a straightforward per-trade fee on top. Every broker charges one, the other, or a mix. XM lets you pick by picking your account tier. The entry-level account has wider spreads and no commission. Simple, not the cheapest. On Euro-USD, the most traded currency pair on Earth, you'll typically see spreads that translate to roughly $10 in cost on a standard size trade, round trip. Fine if you trade a few times a week, painful if you're clicking 30 times a day. The tighter spread account tiers charge a small commission but hand you much tighter raw spreads. For active traders, that math wins. But honestly, XM isn't the cheapest broker in the market for any specific niche. If you're the kind of trader trying to shave the smallest possible amount off every single trade on major pairs, dedicated low-cost specialist brokers will beat XM on raw pricing every time. 2 costs specifically ambush casual users. First, overnight swap fees, a small charge every night you hold a position past the daily rollover, which piles up fast if you hold trades for days or weeks. Second, inactivity fees. If your account sits dormant, XM starts charging you monthly. Small amounts, silent, real. If you're opening an account and you're not going to trade this month, don't fund it yet. That's the cost side. Where XM really earns its score is the platform. This might actually be the single strongest reason to pick this broker. XM is MetaTrader first, full MetaTrader 4 and MetaTrader 5. No proprietary platform you're forced to learn. Quick translation for anyone new. MetaTrader is the trading software that most forex brokers on Earth run on. It's the industry default. Think of it like Excel for spreadsheets. MT4 is the older version, still the most popular among forex traders. Enormous ecosystem of free custom indicators, automated trading bots called expert advisors, decades of tutorials on YouTube. MT5 is the newer version, supports more asset types, better order handling, but a huge slice of the community still lives on MT4. Here's why this matters. If you ever plan to learn trading from an online course, a forum, a YouTube video, 9 times out of 10, that tutorial assumes you're on MT4 or MT5. XM speaks the same language as the entire trading world. Zero relearning, zero lock-in to a proprietary interface only one broker uses. That's a real, quantifiable saving on the time you spend just getting oriented. For absolute beginners, there's a third option, the XM-branded mobile app, a friendlier front end for deposits, ID verification, and basic trades. Start there if you've never touched MetaTrader. Move to the real MT4 or MT5 mobile app only when you actually need their firepower. Trying to learn everything at once is the #1 reason newer XM clients bounce off the platform. And here's the genuine surprise: education. This is not a compliment I hand out lightly, because great education is broker marketing boilerplate. Most brokers mean we uploaded a glossary. XM actually spent money. Live webinars in multiple languages every week. Structured learning paths that walk you from what is a pip through real strategy. Platform tutorials, daily and weekly market commentary. If you're a new trader and you actually consume it, that shortens your learning curve. And shortening your learning curve saves you real money in avoided beginner mistakes. That's the mechanism. Education isn't a marketing feature at XM, it's a cost saving. Research is more functional than original. Competent daily commentary, technical analysis pieces, an economic calendar showing scheduled events likely to move prices. Enough to stay oriented through the week. Not the kind of deep in-house macro thinking you'd get from a bank-backed broker. That's fine. Just don't make XM your single source of trading ideas. So, the call, 8.2 out of 10. That's what XM earns for being a MetaTrader-first CFD and forex broker with a genuinely useful education layer, a low deposit floor, and a 15-year operating history without a headline-grabbing collapse. That last part matters more than it sounds. A lot of CFD brokers vanished between 2009 and today. XM didn't. But remember what I said at the start, the number that actually matters isn't the 8.2, it's the entity that opens your account. On CySec or ASIC, you're dealing with a properly regulated Tier 1 broker with real protection. On the Mauritius offshore entity, you're dealing with a much lighter regime under an identical looking brand. That's the single variable that decides whether XM is a safe pick for you personally. Check it during onboarding, not after your first deposit. Open an XM account if you want a MetaTrader-first home for active Forex and CFD trading. You'll actually use the education, and you can confirm you're onboarded to a Tier 1 entity for your region. Walk away if you want to own real stocks and bonds long term. If you need bank-backed cash segregation, or if the only entity available to you is offshore and that trade-off bothers you. Fits your profile? It's a credible pick, and the 8.2 is honest. Doesn't fit? There are brokers built specifically for what you actually need.
XM earns its 8.2 for active MetaTrader traders on a Tier 1 entity. Full breakdown in the description.